Hi everybody, it's Chris here from Serene Education with the 4 majors and that's update for the 15th of November 2012. Okay, so what happened yesterday on the market? Let's have a quick look at the euro against US dollar on our 4-hour, well, our 4 time frame, the weekly, daily, 4-hour and hourly time frame charts. What do we have on the daily? Pullback after the candle the prior day actually closed higher on the wick and indecisive nonetheless, but as I mentioned, it would more than potentially pull back to that 127500 mark. Sure enough, it did. It traded well above the 127500 mark, however closed lower than that fib ratio. So looking at the actual daily, you can see my low here in July. I've taken the low all the way up to the high. I've taken a fib retracement of that tool, and I've plotted. I wanted to see how far price is likely to pull back now from those highs, and sure enough, the 23.6 was breached at 1290. Price reverted to the downside. Spent a bit of time playing using the institution moving average at 128300 as a support area before we saw the breakout and then the consolidation and then the fall through the latter part of last week. Now falling into the 38.2 fib retracement area here at the 127500 mark, and then breaking through and now coming unstuck at the underside. Now, as we know, everything that falls, there's going to be a pause and then a continuation in the direction of the trend. We've seen that over and over again as prices fallen from these highs here back on the 1500. Fall, pause, then fall again. Fall, pause, and then fall again. So this constitutes the trends, guys. This is the actual movement of a trend. So at the moment now, what we've done near term is we've seen price breaking through this fib retracement area here at 1275. Then we're getting the pullback. Okay, now it's imperative that if this is to continue lower, we want to see this pullback come unstuck now at the 127500 mark. Okay, so it's imperative that we see price now coming unstuck here at the 1275. So we want to see exhaustion. Okay, exhaustion for price not finding any momentum upside. We want to see more candles with more emphasis on the bottom end of the candle range. So if we look at the 4-hour, for example, we want to be able to look and see if we can see any candles like that. Here is that 127500 mark again, the fib retracement area at the 38.2, and you can quite clearly see yesterday in particular, this particular candle here at 2100 last night, GMT, major exhaustion candle. Price has fallen lower, however, not really moved with momentum. Price is still interested in trading upside, and you can see the 4-hour that's in play right now is really trying to get above that all-important 38.2 mark. Get above that, then price will start looking more positive, and price would probably eventually start heading up towards that 1283 mark, the prior support and resistance long-term daily. It's imperative. The only thing that's going to cancel out exhaustion candles like this is a bullish engulfing candle. Okay, so price you'd expect to fall back. However, if I draw a fib retracement from the current intraday low to this high that we saw here, you can quite clearly see that price didn't even muster enough momentum to actually drop below the 50% line, which also was the 20 period moving average. So very, very important. After an exhaustion candle like that, you want to see a nice bearish engulfing candle as your confirmation candle. Okay, very, very important. It's important when you're looking at candlestick patterns, you want to see confirmation from that. So this is an exhaustion candle telling us there's more selling. Okay, great. Now you want to see that follow through. You want to see those selling momentum continue, and if that selling momentum is coming at a resistance area, you want to see that falling through here on the next couple of candles to indicate that price is going to head back towards the current low, which will mean 1266 on our 4-hour time frame. That failed to materialize as we had a very indecisive candle here. Very small range after a major exhaustion candle. We had a very small candle here. It didn't really bode well, and sure enough, prices now remained at the upside of this. So what we want to see now on an hourly and stuff like that is primarily a nice bullish engulfing candle above that area. As you can quite clearly see now, the 23.6 here is also in the same area of the institution moving average, so lots of resistance above it. It's imperative that if this is to remain positive, as you can quite clearly see here on an hourly, we have higher swings, but near term we've gone to a consolidative range. We want to see this consolidative range being broken, and broken upside favoritism and a nice bullish engulfing candle. That's the only thing that's going to really change the psychology of this downturn intraday. Okay. The other option is now we have a lot of indecision. You can see the last couple of hours have been very indecisive, a lot of wicks to the upside. and more emphasis on the bottom of these candles. So what we don't want now is the European session to open and we get a bearish, well, what we want to see though, and I'm not saying we shouldn't be seeing it, but we can make money in any way the market moves primarily, is if this is to be genuine resistance, then we want to see that bearish engulfing candle. And that bearish engulfing candle can close lower than the low that we saw this morning, the Asian low, which will be roughly around here 1275.25. Then that's going to constitute to now being our bearish engulfing candle that we've seen after this exhaustion candle here. And that will dictate to us that we should be looking for downside being the long-term target here, and we should be targeting that 1266.60 as I mentioned as our first target. Yes, the histogram on our side is telling us it's blue, etc. like that. However, if price is now moving into a major institution moving average on our hourly and failing, you can quite clearly see now it's spent the last bloody day, look, almost a full day now, finding resistance at the institution moving average. It's either going to do one or two things. It's either going to break through that and say, listen, yeah, I'm still happy and I still want to be going higher. Okay, so the candle we're looking for now is either going to be a bullish engulfing candle, or it's going to say, listen, yeah, I'm sick and tired of headbutting. I just want to move away from this, and you when you start getting a nice bearish engulfing candle. So you're just looking for two things to happen on this time frame: either bullish engulfing candle above 1275 close on an hourly would constitute potentially for further upside movement intraday, and then we could target the upside towards at 1283 for the remainder of this week, or bearish engulfing candle close below 1272, and we look for the downside towards 1266 as our first target. On to sterling. Let's have a look and see what's happening on this particular time frame. Okay, negativity yesterday after an indecisive candle the day before that. You can see that Tuesday's candle spinning top at the underside of 15,900, which happens to be a February retracement pullback. And I've taken these areas from the low here that we saw in June of this year. So the 23.6 here at 16,1500. Then we had the break lower, and heading into that psychological round number 1600. Since then, bit of consolidation at the underside and then move to the downside, and that's now filtered through. And you can quite clearly see I've got this green horizontal line here that constitutes to the institution moving average. You can quite clearly see the institution moving average moving below price, and as long as price is trading above that, then ultimately it's still looking positive. However, near term, you can see the histogram on our CTC strategy template has started to go red, and the momentum has been falling into that. So you should be shorting into the institution moving average. Now we are at the institution moving average. You want to see price actually now finding resistance. You can see yesterday's candle closing lower. Let me just take this horizontal away so you can see quite clearly. Now this candle over here is physically closed lower than the institution moving average. And now you can see, if I just zoom in on the Asian session, you can see price has been pulling back to the underside of the institution moving average. Okay, very, very important. Now that if this is still to remain negative, that we should see price failing at the underside of the institution moving average on this time frame. So here at 15,800, we need to make a note of that on our intraday time frames to tell us that we're seeing price trading at the underside of the institution on the daily. So there we go. That is the 12,800 mark. I'll make it nice and dark, because now that becomes our intraday resistance level. See, price is trading through it. A lot of indecision on the 4 hours, a lot of spreading tops, and you can see prices now made a small consolidation here at the underside and pulled back. It's imperative for this to remain negative. If the sterling is still to remain negative for against the US dollar, then we need to see price failing at the underside of the 15,800 mark intraday. Okay, very, very important. So we want to see on our hourly in particular. If I go to my hourly, this is going to be my entry. This is what I'm basing my entries on, my hourly candle. I want to just make this nice and strong. I want to see a nice bearish engulfing candle off the underside of the 12,800 mark and closing lower than the prior consolidation low, or the Asian low, which is down here that we saw at the start of last night's session, the Asian session. So a nice bearish engulfing candle below 1283.35. So if you think about it, there's only 15 pips of distance between the 1250 and the 1235. So a nice bearish engulfing candle below that. The more distinct with less wick, the more probability that it is a genuine negative candle, and then we should be looking for those entries. Okay, very important. You can see the histogram remains more red than blue. One or two areas of positivity, but you can see that price was trading into major support and resistance levels on these time frames. So there would be no entry levels for these because you'll be trading into resistance. Okay, so very, very important. There's the beauty of the histogram, or CTC histogram, is the fact that you can see, even though price has been pulling back, that the overall sentiment, even though the institution moving averages above price, that the overall sentiment is very much negative. So we should be looking for trades to the downside, not trading upside. We don't want to be trading into market sentiment. We want to be trading with market sentiment. Market sentiment is negative, so therefore we should be looking for negative trades intraday. Okay. The last thing you want to do is trade against market flow. You don't know how far price is going to pull back, and that means if you don't know that, then you're speculating, and if you're speculating, there's a lot more risk attached, and you could end up making a lot of bad mistakes. Okay, so what we're looking for now on sterling is a nice bearish engulfing candle below 1583, and then we'll look for those targets to the downside for the remainder of this week. On to the US dollar Swiss franc. Okay, let's look at that daily. We mentioned the past couple weeks that 940 had to be, well, was prior major resistance. As you can see, the institution moving average was trading above price, and you can see price on a number of occasions trading within this consolidated range, finding support and then heading back up towards this 940 mark. Headbutts and then falling back, headbutting and falling back. And near term here, going into November, we had a nice bullish engulfing candle before we saw the breakout. Not a very convincing breakout, but we had a slight pullback. There we go. And then price actually started to build on that. You can see this candle here in particular. The most important thing, closing higher, but at the upper end of the wick, the 50% candle, okay, and that confirming that price was looking higher, and sure enough, we could have taken our first trade to the upside. I've taken the current high that we saw here back in July to the current low that we've seen here in October, and I can see the Fibonacci retracements have been marked on the chart. And 950, a nice round number. You can see the 23.6 here at 940, another round number, the 38.2, the round number at 950. 50 at 960, or another round number, 61.8 at the price support and resistance level here at just short of the 970, another round number. So that's working really well, and that would have been our first target, okay, which happens to be the first consolidation here at 38.2. Sure enough, we went into that indecision candle followed by an exhaustion candle, spinning top exhaustion. You can see that there's more price emphasis at the under the 50% line of this candle at a resistance level, so we should be looking for intraday shorts opportunities. And showing our price yesterday moving lower, however closing above the 50% line. In fact, on the 50% line, it looks by the things. So very, very important. If this is to remain negative, then we could see price reverting towards that institution moving average. You can see near term, you can see the 20 and the institution moving average are moving higher. Okay, so as long as it maintains above 940 now, then ultimately price should be looking positive. This is just a pullback in the overall pattern as the breakout, and then we should be seeing price move higher. However, if we're looking for opportunities to the upside, you can see the daily is looking positive, then we should be looking for positive movement, guys. Okay, you can sell here, but then you want to be taking profits quite quickly. We don't know how far it's likely to pull back. We do know that 940 is a major support because it was a prior resistance. Okay, prior resistance with the breakout now becomes, or should become, new support. So if anything, you can see the intermediate trend now swing high. Price could fall into this area here, but you don't want to be selling naked. Okay, you want to be, if you are shorting here intraday, you want to be make sure that you're taking your profit as and when it presents itself. So if we look at our 4-hour chart, you can see the histogram remains pretty blue here as we've seen price moving up. We had that breakout, the pullback, and then the continuation up towards that 950. We had a break of 950. You can quite clearly see on our 4-hour. We had a nice little juicy 4-hour candle break. Then we had a spinning top. Price actually closed higher. The next candle would have to have been bullish engulfing to tell us, listen here, prior resistance, new support, and then price would have hit higher. No, what happened? We had a bearish engulfing candle at a resistance, which constitutes to an evening star formation, a 3-candlestick formation called an evening star at a resistance. Very important. These candlesticks only happen at major support and resistance levels, and showing up price became bearish, and now we've targeted to the downside. In doing so, you can see the current highs. I've taken these highs intraday, swing high, swing high, swing high, swing high on the low, low lows. You can see the price is now consolidating there. So if anything, if price can actually find support here now, notice a lot of candles with a lot of wick on the underside. So that must tell you that there seems to be more buying sentiment at the upper end. Okay, if in the next candle we're looking for this, if this is genuine support now, we want to see a bullish engulfing candle. If there's a bullish engulfing candle here forming at this level, let me just extend this at 945. or 944.50, we want to see a nice bullish engulfing candle here on the 4 hour. That would constitute, this is now a support, and this would be a consolidation area. There we go, my little box. Everyone's going to be laughing at me when I talk about my box. But what I want to see now is, I want to see one or two things. I want to see either a bearish engulfing candle close lower to tell me this is still looking negative and I should be targeting 940, or I want to see a bullish engulfing candle above this consolidation here at the upside, which tell me this is now a new support. A lot of wicks here. It'll just tell me it's a nice juicy hammer formation, and then I'll be targeting near term 950 and above. Just looking at the hourly entry, you got the institution moving average above price. So price, if it remains below the institution though, is more likely to spit out a negative candle, because of the fact that the institution moving average now is above price, acting as resistance. You can see all the moving averages above price as well on the hourly, telling us we should be looking for shorting opportunities. And as long as it maintains below the institution, there's more likelihood for price to end up coming out negative. So if this is a consolidation, now that we saw on our 4 hour, the hourly, if anything, we should be looking for a bearish engulfing candle to constitute that we're still looking for negativity. The only thing that's going to stop this from looking negative is a bullish engulfing candle. So here, very, very important, guys. Patience is key. Rather wait for that hourly close. Okay, look at the market to see if there's going to be genuine sentiments of the fundamental news that's going to move the market to give us this bullish or bearish outlook. When you get it, when you get that important close below or above, then look to actually take profits from that. Don't second guess what the market's likely to do. Wait for the market to deal a hand, and then we will trade accordingly. Last of the other days is the US dollar Japanese yen, and let's have a look at what's been happening. Yeah, compared to the three I've just spoken about, this one has seen the most return in the past 2 days than it's seen over the last week for the euro, US dollar, sterling, etc. It's absolutely crazy. You can see quite clearly here we've seen a lot of whipsawing though on this particular time frame on the daily for this pair. You can see we went into a nice trend to the upside, targeting the 80, which happens to be a major support and resistance level over a period of a number of months, in particular through most of this year. 80 has been a resistance level as price has been trading below it, and you can see the histogram on either side has been telling us that negativity has been there. However, near term, the US dollar has been gaining a bit of strength against its yen counterpart, and in doing so, attempting this 80 mark on 2 occasions here near term, breaking up with a nice bullish engulfing candle, however, not pulling back to find support. Not finding support on the first attempt, but moving back towards the institution. Reattempting and breaking higher on the second attempt, finding support above it, however, not maintaining that support and falling back below the institution. A lot of indecision over 3 days in particular. And if this was negative intraday, we would like to see a nice bearish engulfing candle follow through. Tell us the sentiment was still looking negative. No, price was still interested in moving higher. And sure enough, yesterday we had a nice bullish engulfing candle above. Now, as long as it maintains above 80, it should be targeting the upside. Okay, near term, the next big target area would be if and around here at 81. What are we looking at? 81.80-ish or 81.75. Anyone above 81.50, there's a nice consolidated range here above that area. So near term, as long as the sentiment remains in play, we should be looking at those areas to the upside as our first target for the foreseeable future. So on our 4-hour chart, you should see that momentum moving higher. Fantastic. You can see it really moving with a lot of guts out to the upside. 80 well below price as we speak. So nice yesterday. In fact, a nice move to the upside, consolidation, and then second extension to the upside has progressed. So you're seeing consolidation in the last 4 hours. That's taking place, and that's taking place above the prior high, consolidation high that we attempted just near term here in November on the, the 2nd of November. You can see that high has now been broken, and now price can remain above that now intraday. So anything above 80.70, just make a note of that. So if price can stay above 80.70 intraday and find support here, we could see price actually building on that support and then heading up to that all important target to the upside, 81.50 I mentioned. So let's hope that continues, and as long as everything's looking fantastic, here we go. I'll look at the hourly, 81.70. Let's put that in. Prior high here, back on the 2nd of November on my hourly chart. You can see prices really moved with a lot of guts. So I want to see how far she's likely to extend. So I'll take the start of this trend to the upside here to the current consolidation. We had a breather here and price is moving higher. You can see the 81.50 or the 81.05 is not too far away, trading above the 61.8 now. As long as it finds support above 61.8, which happens to be 80.70, then she should be targeting the 100%, which is 81.05 here above us. Okay, so not really much movement to the upside here in terms of pips. You should be able to get about 10 or 15 pips from it, but very aggressive. Look for any consolidation above here. As long as it maintains above 80.70 intraday, then we should be looking for nothing more than top side. Okay, very, very important. The histogram on the other side is looking good. All the moving averages below price. Everything fantastic. Higher swings depicts upside sentiment. Swing high, swing high, swing high. All looking good. All looking rosy. Let's just see if we can actually maintain above 80.70 now going forward for the remainder of this week. And then we should be looking for nothing more than upside targets. That's it for today, guys. That's my analysis done. All in 20 minutes. A nice long one today. But yeah, follow the rules of the CTC if you are using it. If you are interested in trading this particular, or knowing more about, or finding more about this particular trading style, please drop an email to us at info@sereneeducation.com, or take a look at our website. It's www.sereneeducation.com. If you're interested in getting into Forex, there's another site that we do. We promote a nice little introductory into Forex. If you go to the following website, www.forexmadeeasy.com, have a look at it, see what you think. It's really, really effective. A lot of we've sold on average about 300 copies over the past couple of months, and people have been really, really happy with it. So have a look at it. For all you newbies, if you want more questions to be answered, please drop us a line at info@sereneeducation.com. We're more than happy to help you guys out. Otherwise, have a fantastic trading day, and I'll see you first thing tomorrow morning. Until then, trade serenely.